Good morning viewers, this is Shiv Kumar from the house of Akshaya. Herein I give a wrap up of the commodities complex as we see it on Wednesday, November 19th, 2014 at around 10:15 am. First let me give an update on the macroeconomic data and the fundamental news that is going around in the world. US markets closed at fresh highs over the past few trading sessions, backed by strong data that are coming out from the past few days from the US markets, as also the employment data which seem to be on the positive side. But the key to the whole thing is the FOMC Fed minutes are expected later tonight, and that is likely to have a major impact on the movement of the US dollar. US dollar index, after hitting highs of around the 88 mark, now consolidating at around the 87 mark. Please note that as the US dollar gains in strength, commodities are expected to come down and vice versa. Now this commentary that is expected after market close today will have a deep impact on the movement of the US dollar and hence likely to have an impact directly on the MCX rates tomorrow morning, especially in bullions, gold and silver. Likewise, on the commentary that is likely to come out today, we can get more insight as to when the probable rate increase in the US by the US banks are likely to take place. There are divided views. One view is that it's likely to start as early as 2015 middle, and the other view is it could be deferred to 2016 early, in which case it would be beneficial to the emerging markets like in India, especially on the equity front, as more fund flows could come into India. OPEC meet is scheduled for 27th of November, and that is likely to have an impact on the crude oil prices. Whether any increase or decrease in projected output is likely to be discussed, although status quo is likely to remain. Two other fundamental news that needs to be watched out is the Swiss gold referendum that is likely to take place towards the end of this month. If the referendum is positive that gold reserves need to be increased by the Swiss government, obviously this will result in fresh purchases of gold and ETFs would take off, and this is likely to increase the price of gold in the short run. As we have all noted since yesterday, the Japanese government has resigned and going into elections on the 17th of December most likely, and this is likely to have an impact, okay, because the yen seems to be weakening sharply over the past 1 month. Various stimulus measures have also been announced by the Bank of Japan in recent times, more recently on 30th of October. Especially, they were originally scheduled to increase the sales tax, and now it has been deferred once the economy has gone into a depression, as has been stated a couple of days back by the Japanese government. So this factor needs to be watched out in the month of December for further fundamental news and as to the movement of the yen vis-a-vis the US dollar and the INR. As far as Indian markets go, the INR is now stabilizing at around the 61.75 to 61.85 mark. Strong support is at 62. It is expected to weaken gradually as the year end comes to a close, especially since December most of the funds overseas would liquidate all their positions to show better NAVs, and this is likely to result in dampening of US inflows of US dollars into the market. So 62 a break above could result in 62.20 to 62.5. Strong resistance is now at around the 61 mark. Expected to move closer towards the 62 mark. This would have an impact on the MCX markets and likely to raise up the commodities that much higher. As far as equities go, equity futures, Nifty futures is now trading at around the 84.50 mark and spot at 84.30, consolidating at current levels, unable to push higher than the 84.60, 84.80 levels, trying to form a base at around the 84.20 mark, and strong support is now seen at 83.50. Buy on dips is still advised as the strategy, even as the market consolidates at this point of time. Now I talk about the individual commodities as they stand right now. First we talk about gold. Gold in the international market is now trading at around the $1193 per ounce mark. We've seen over the last couple of weeks, especially on Fridays, after hitting lows of 1130 and 1140 and 1145, has sprung up suddenly on late evening trades on Friday by at least $30 to $40 to close above the 1170-75 mark. Now consolidating at around the 1190 to 1200 mark. Yesterday hit a fresh high of $1200 with a high of 1202. Now trading at the 1193 mark. Support is now seen at 1185, and a breakdown below 1185 could see levels of 1175 and 1160. On the other hand, if it again sustains above the 1200 mark, resistance will be at the 1220 mark. So in the short term, we can see supports at 1185 and resistance at 1210. Of course, the impact could be felt tomorrow morning, especially after the US Fed minutes are announced. Overall, we still see that 1240 has not been breached over the past few months, okay, and the next positional upside would be only on a break above the 1220 to 1240 mark, whereas a break below 1160 tomorrow could see levels of 1140, where the round bottoms of the last 2 weeks have been seen. Next major downside could be only on a break below $1130. On the MCX, it's now trading at around the 26,600 mark. Immediate resistance is at 26,720 and support at 26,500. Trading sideways as of now, unless it is broken on either side, either by 26,500 or 26,720. Next levels could be watched out for. Silver is now trading at around the $16.10 mark. A break below $16 could see $15.5. On the other hand, on the upside, resistance are at 16.4 to 16.6. A break above could see $17. These are very, very broad levels that I have been giving as of now, simply because we have the Fed commentary that is likely to come up. And I can't rule out a 2% up or a down movement by tomorrow's trading session when markets open here. On the MCX, silver is now trading at around the 35,800 mark. Immediate resistance is seen at 36,200, on a weekly basis at 36,500, with support at 35,500. So as of now, yesterday and today, it has been moving in a sideways zone, both gold and silver on the MCX, and it's very difficult to trade this market unless clarity comes by tomorrow morning. So wait and watch would be the approach unless you want to do intraday trades. Now, how do you trade gold, especially on the MCX, with a stop loss of $100 and a target of $200? Please visit our website and our Facebook and our commentaries, which are being given periodically. At least on 2 trading sessions in a week, opportunities are bound to come where you can capture the levels that I have spelled out right now. Crude is now trading at around the $74.5 mark. Today is a crude expiry, readers may just note, and it's now trading on the MCX, the first month contract, at around the 45.83 mark. Now below 4600 it is weak, with resistance above the 46.30 mark, likely to test up to the 45.20 mark. Inventory is expected to be minus 0.7 MB as against last week's projection of minus 1.7. Overall, the trend continues to be bearish. Now, if 45.20 is breached on a closing basis, further declines up to 4400 could be seen. On the other hand, after the inventory today and after the commentary of the Fed comes out, if it sustains above 46.50, we can see levels of 47.20 and 47.80. As of now, intraday players could sell crude below 4600 with a stop loss above 46.30 for targets of 45.60 and 45.40. Of course, 45.20 is a strong level that needs to be watched on. Natural gas opened gap up at around closer to the 266 mark, now trading at around the 262 mark. On a weekly basis, the support is at 257 and 255. Now, if a hold about 267 could see levels of 270, 275, and after the inventory on Friday, I believe so, this week, where the inventory is expected to be on the negative 12 BCF as against the positive of 40 of last week, more bullishness and positive sentiments could come in. Now, over the past few days, we've seen that gas has been moving in a zigzag range, especially as the weather in the US deteriorates. Cold was expected to set in, but now it has been alleviated to some extent, and milder climates are anticipated during the coming week, and hence the sharp decline over the past 10 days from levels of 279 to yesterday's low of even 257. Now trading at 261.5. Stop loss for buys could have to be put at around the 257 levels. Now copper is trading at around the 411 mark. Yesterday hit a high of 415, which is the high on 2 consecutive occasions over the past week, and hit a low of around the 408 to 409 mark. Now, so long as it trades again below 410, again we could see levels of 407 and even up to 405. Immediate resistance is seen at 430. No major bullish signals are seen as yet in copper, and on a positional basis one could sell copper on every rise with a stop loss above 421 for targets of 400 to be achieved, and if 400 gets sustained and broken over a period of time, 390 and 380 could be the positional levels that one can look at as far as copper is concerned. For intraday trades, copper needs to wait, but if you want to sell copper, stop loss will have to be at around the 414 to 415 mark. A break below 410 could give further confirmation of further weakness in the metal. Of all the base metals, nickel seems to be stronger at around the 967 mark. Yesterday hit a high of 980, but then broke down to around the 960 along with other base metals before the close of the day. Now it trades at around 967. 970 is a strong resistance level, and a break above 970 on a closing basis could again test 980. On the downside, support is at 955 and 915. Major weakness could be seen only on a break below 915. Till such time it trades sideways with a mild positive bias, and above 970 you could see further bullishness setting into the commodity. Now among the other base metals, all three, zinc, lead and aluminium, are seeing sell and every rises at around the resistances. Aluminium is now trading at around the 125.40. A break below 125 could see weakness till the 124. Of course, 124 on a weekly basis close below could see a sharp decline. Resistance now seen at 126.50. Zinc is now trading at around the 138.60 to 70. Sell on rises is recommended up to the 139 mark, with stop loss above the 140 half mark for targets of 136.50 to be tested. Lead again has seen resistances over the past few trading sessions at the 126.50 mark, now trading at around 125.20 to 25. Sell on rises is recommended with a stop loss above the 126.50 mark for target of 124 and 123. Of course, on a positional basis, a break below 120 to 121 could see positional sells as far as lead is concerned. Now overall, as far as the base metals go, hence the strategy would be the sell on rises. Bullions are trading sideways, limited opportunities, crude sell on rises, and natural gas buy on dips. For further updates and commentaries, please visit our website at www.akshayaship.com. Please visit our website, Facebook and Twitter for all updates being posted there. Thanks and have a safe trading day. Thank you.